Hi, everyone. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu, I'm coming to you live here so you can see this. You know where I am, Sonu? Where am I?
Wow, New York City.
I'm in the middle of Times Square. I'm in the middle of Times Square in the back of an Uber. So we thought it'd be fun to do one like this. But Sonu, we got to get right to it. This week's Take 5 is 2 keys to the economy. And these are things we've talked a lot about. We've got some recent data. We're going to talk about inflation and productivity. We still see positive signs on those fronts. Let's start with inflation, Sonu. Take it away. CPI came out. They told us it was hotter than expected. That's consumer prices. What'd you find, a minute or two on that inflation data?
Yeah, look, CPI is running at 3.2%. So here's a big picture, right? CPI is down a year and a half ago. Remember June 2022? CPI was up 9% year over year. That's down to 3.2%. Now it looks like it's stalled over the last 6 months or so, right? It's not moved from about 3.2, 3.3%. Why is that? I think the big reason is, you and I have talked about this before, shelter inflation. The way the government calculates shelter inflation, it's as if, I won't spend too much time with this, but it's like you and I are homeowners. They try to measure how much we are sort of paying ourselves to live in that home. Like, how much are we paying ourselves to rent the home, right? Now, safe to say, most of us don't experience that kind of inflation, but that's what is keeping inflation, headline inflation, elevated, even core inflation, if you take out energy and food, right?
And listen, we hear a lot, the Fed's goal is 2% inflation. If you take out shelter, we're there, right? The last 6 months, the last year, it is sub 2% in a lot of cases, right?
Yeah, it's running at 1.8%, right? And people always say, oh, don't take, we pay for energy and food. Why are you taking it out? Well, the Fed takes it out because it's volatile. And it's not like they don't focus on headline inflation. That is, at the end of the day, their mandate, right? But they're looking at core inflation to kind of tell them where is future inflation going to be. And that's why they take out food and energy. But, keep food and energy in there. Take out just shelter. It's running at 1.8% annualized last 6 months and year over year.
And that matters because it opens the door potentially for the Fed to cut. Remember, the Fed hiked rates from 0% to over 5% recently to slow down inflation, to slow down, you could argue, the economy. Now the economy is moving and inflation is coming back. So part two to this conversation, inflation is going the right way. Let's just put a bow on that. Let's talk about productivity, because we've been saying for a while is one of the big keys to the whole thing is strong productivity, something our country hasn't seen extended strong productivity literally since the mid to late 90s. So we just got an update on productivity for the fourth quarter. What did you see?
No, I think it comes to where rubber hits the road is in wage growth, right? So wage growth, we got the payroll numbers last week. Payrolls are running strong. You average over the last 3 months, wage growth is running about 4%. If you look at the aggregate economy, aggregate income growth, right, across all workers in the economy, that's running 4.5% to 5%. That's where we were pre-pandemic. Now, at the same time, inflation's coming down, like you and I just talked about. I think, underlying inflation is probably close to 2%, right? How are we getting strong wage growth, which usually you think, oh, wouldn't that drive up prices? But it's not. That's because of productivity growth. Productivity is a key piece in there. Wage growth is essentially productivity plus inflation. If you have high productivity, you can have strong wage growth with low inflation. That's what happened in the late 1990s. That's what allowed Greenspan back in 95, 96 to ease rates, right? And they didn't have to ease a lot, but he did enough. And that spurred investment. And now, we're talking about investment potentially into AI and things like that. You get 1, 2, 3 rate cuts. I don't think we need much more than that. It's just to signal the Fed's intent, and we could be off to the races here.
Exactly. We've got about 1 more minute to go in the latest Carson's Take 5, 2 keys to the economy. And you think about productivity, 8 million people started new jobs, or 8 million jobs were created the previous 2 years. That's going to slow. We don't want to grow at 300,000-400,000 jobs every month, but that's okay. As the economic cycle ages, we're not seeing quits. We're also not seeing layoffs. Think about this. If you're at a job for a year or two, what's going to happen? You're going to become more productive because you finally know what you're doing. The problem with 22 was everybody's getting a job, get 10%, work across the street, take you 3 months to learn. Oh, then you quit and go somewhere else. We're not seeing that. So that's something else. Also, huge jump in business applications. And let's just make this real quick. We haven't seen anything like that. Again, way more applications for businesses over the last, really last year and a half or so relative to the last cycle. Again, new businesses coming in. There can be some higher productivity there as well. Sonu, we've got about 10 or 15 seconds. Any final comments to wrap this one up?
What are you going to do in New York City?
Well, right down here, see, there's taxis. Look at that. I mean, again, the very first time we've ever done one of these from an Uber. I'm running around. I did a client event last night. Going to run around the city today, do some media stuff, meet some reporters. I mean, I did have a nice meal last night. It's New York City. You got to eat a little bit too. So having fun there. It's a bull market here. I'm looking around. This city's bustling. So there's a lot of positives. The economic stuff. Exactly. Inflation still looks like it's trending the right way, and productivity is really, really strong. Two keys to the economy that we think are going to keep this economic cycle going and this bull market going. Sonu, we'll chat next week. Everybody take care. It's latest Carson's Take 5. See you soon. Take care. Goodbye.